Hello, everyone. I'm Chris Kapches, president of Chestnut Park Real Estate, and today I'm going to provide you with the Toronto and region resale market report for November. I'm going to start this report actually with a little bit of poetry, in that I'm going to paraphrase T.S. Eliot, a line from his poem *The Hollow Men*. Basically, 2023 is coming to an end, not with a bang, but unfortunately with a whimper. And the information that I'm going to provide you will demonstrate that. We begin with the number of sales that took place in the month of November, 4,237. That's a 6% decline from last year, and as we all know, last November was not a particularly memorable from a sales perspective month. It came at the tail end of declining sales, and I'll put a chart up behind me in a moment. You'll be able to see that. The sales that were achieved in November of this year are the lowest for any month, any November month, going back all the way to 2008. And we all remember 2008. That's when the equities market imploded, and the real estate market in turn came to a screeching halt at that time. What is peculiar about the difference between 2008 and today is that whereas we have to look that far back to see such few sales for the month of November, back then the population of the GTA was 20% less than what it is today. So if we were to take those figures into account, the 4,000 odd sales that we did in this November is particularly low from a historic perspective. And the November sales is the third consecutive month in which we've seen total sales less than 5,000. And you'll see from the chart, we've been inching our way down as we make our way to the end of the year, hence ending the year with a whimper and not with a bang. The one thing that is peculiar, though, about this market is that, notwithstanding that the number of sales have been declining consistently as we make our way to the end of the year, average sale prices, ironically, have stayed particularly strong. And on first blush, that causes some consternation, because normally in a marketplace where your sales are going down, your average sale prices are not holding firm. They're usually following the pattern of average sale prices. They're usually following the pattern of the declining sales. What we're actually seeing here is a bit of a market anomaly, but there's an explanation for it, and the explanation is actually a twofold. First of all, the demand has increased dramatically over the pandemic and now into the post-pandemic period. And that's primarily due to the influx of population growth in the GTA, of course generated by the huge numbers of immigration that are making their way to the area. The other side of it is that even though affordability is a huge problem for most consumers and would-be home buyers, because of the size of the demand within that cohort of potential buyers, there are still people who have money that can afford to pay the prices that sellers are looking for. So hence, prices have stayed up. And as you can see from the chart, prices have actually strengthened as we've made our way right through to the tail end of the year. So at the end of November, we see that the average sale price is now $1,082,000. Very strong price, given the fact that sales are as low as they were in 2008, when we were going through an economic crisis. I should also point out that during this period, inventory levels have not been particularly high. Yes, most recently we've been seeing an uptick in inventory. In November, 10,545 properties came to market. That is 16% higher than the number of properties that came to market last November. But to put it into perspective, I went back and looked at how many properties were available for sale in November of 2008. And even I was shocked in comparison because there were over 27,000 properties available for sale. Hence, average sale prices have stayed strong. Low inventory, high demand, and within the demand, there is a cohort of people who still have enough money that, notwithstanding the affordability constraints, are able to buy the properties that are available for sale. And that's demonstrated by looking at housing type. For example, detached properties came in at $1,617,000 as the average sale price. Strong number. Up by 3.5% compared to last year. Semi-detached properties came in at $1,217,000, up 2.4% compared to last year. But what we find, condominium apartments, which are the least expensive housing type, are actually declining, both in terms of the number of sales and in terms of average sale price. Why is that the case? Because the cohort of people that are looking to buy condominium apartments, primarily first-time buyers, are the most vulnerable cohort when it comes to affordability. So as a result of that, they are paying less and are buying less frequently because of the fact that affordability constraints are keeping them from getting into the market. So as the year comes to an end, we're looking at approximately 65 to 66,000 properties as being the total number of sales for 2023. You have to go back more than 2 decades to see a year in which only 65 to 66,000 properties are going to be reported sale. If we look at a more recent history, we'll see that throughout 2010, right through to the pandemic, except for 2018, average number of sales was in excess of 80,000. Twice we broke 100,000 sales. So to only be coming in with a little over 65,000 sales at the end of 2023, that's really a low number. And I'm very confident in telling you that that's going to be the number, because last December we did about a 3,000 total sales, and we'll probably do about the same in December of 2023. So the year is, again, as I said, it's coming to a close with a whimper as far as the resale market is concerned. At the next report that I provide you, which will be the year-end report, I'm going to make some forecasts as to what I think will be happening in 2024. And I actually believe that 2024 is going to be anything but the kind of year that we've experienced. It's going to be a much more positive, with more sales taking place, although we may see some impact on pricing. So until the next report, please stay well, and I look forward to providing it to you. Thank you.